Good day to everyone. Let's start our discussion for today. And in today's class, we are going to cover share-based payment, that is IFRS 2 basically. And IFRS 2 share-based payment is one of the most important standard for your corporate reporting exam, for your strategic business management exam basically. Why it is important? Because normally we are discussing UK based studies, and in UK there is a concept of shares, particularly when you are employed, like you are at CFO level, you are at director level, or even you are employees. Then companies try to motivate their employees. So as a source of motivation, they have introduced share based payment. For example, there might be some alternative. You can talk about the bonus, like companies will award you bonus, and this bonus is based on your profits, or this bonus is based on your revenues. So if your bonus is based on profits or on revenues, then again there are high chances of manipulation. So just to make sure that there is a no manipulation and there is a true and fair view, and companies get the real worth, real increase in worth, that's why they have introduced the share-based payment IFRS 2. Although these share-based payments are just like bonus, but there is a very less chance that there will be a manipulation, instead like profits or revenues basically. So let's start. First of all, let's look at the content and then we will move forward. In IFRS 2, first of all, we will be discussing the objective, and briefly I told you what's the objective of IFRS 2 share-based payment. Then we will look at the scope, which transaction fall and which transactions do not fall within definition of IFRS 2. As we know that there are multiple types of transactions in IFRS 2. First of all, it is equity settled transaction. So what do you mean by equity settled transaction? How we are going to record, what will be the accounting treatment, and what will be the double entry for equity settled transaction. Then we will be discussing about vesting condition. As we know that these are transactions, so there might be some condition. So it could be vesting condition, it could be non-vesting condition. Again, it might be market versus non-market based condition. So what do you think? What is the criteria? What is the definition? And how we have to meet out this condition? Is it important to meet this condition or it is not important? We will discuss in our complete discussion. Then we will be having two different concepts. First of all, it is modifications and repricing, and second, it is cancellation. Once you have issued the share, can you modify those shares? Can you modify the transaction, or can you cancel out, or you can go for settlement? Is it allowed or is it not allowed? We will discuss these rules also. Then when you will be exercising your option, so what will be your treatment, what will be your option, and how you can exercise your shares as well. For example, your shares have been vested out. What if you want to repurchase them? Yes, there is another option. After vesting, you can also repurchase your share. So what will be your treatment? Then it is a second type, that is called as cash settled transaction. So what do you mean by cash settled transaction, and how cash settled transaction differs from equity settled transaction as well? Then lastly, we will be discussing choice of settlement. What do you mean by choice of settlement? Earlier, we were talking about equity settled transaction. Second thing is cash settled transaction. And third thing is basically choice of settlement. So what do you mean by choice? Either entity has a choice or a third party has a choice. So what will be your treatment, and how this treatment will vary, and it will depend who has a right for choice. Finally, we will be having a brief discussion on group and treasury shares transaction. There will be disclosures of IFRS 2, and finally, we will close our session on question and answer basically. So all of these are contents for our IFRS 2, and we will discuss each of this content in our detailed discussion basically.